Hi and welcome to this video where we talk about the biggest transactions that Ark Invest have invested in the last week. As always, this is not investment advice. Let's get to it. The big buys. Twitter. This is a high conviction play for Ark and a first big purchase since around May. Number 2, UiPath. That's nearly $250 million that's been invested in UiPath in this month alone, and there's still a week to go. The stock is slowly creeping into that top 10 list of Ark Invest. Third is Coinbase, another very high conviction stock, and now number 6 on her top 10 list. This only represents around a third of the buys in the last week. There were some big buys out at Zoom, DraftKings, Unity Software as well. On the selling front, big sales at KE Holdings, China's largest real estate platform, a bit like Redfin in the US. She has trimmed about 99% of her portfolio in the last few months. Ark have been selling many of their China positions at the back of regulatory pressures and Chinese government crackdown on tech companies there. Interestingly, the only Chinese company where they're still buying is JD Logistics. They obviously see enough opportunities in there, even in this environment. Then there's Pure Storage. Their shares have taken a beating and quite a way off from their highs of nearly $30 back in Feb. They had a stellar start in Q1 and analysts see them as a buy with 50% upside in the next year, but not Ark Invest. This is a competitive sector and their growth over the last 5 years has not been exciting enough. Then there's Abbvie, which looks more like a rotation out, which Cathie is known to do from time to time, and to use that money to invest into more high conviction plays, which at the moment seems more like UiPath and Coinbase. Their Q1 results easily beat expectations. Their aesthetics business has been doing phenomenally well. But they've also faced setbacks. FDA recently delayed a review of their arthritis drug Rinvoq, which is obviously going to take a hit on their reputation. With that summary out of the way, let's deep dive into the top 3 stocks she's buying. First up, it's Twitter. Now, Twitter recently released their Q2 results and it exceeded expectations. Active daily users were 206 million, which is in line with expectations, but they added 7 million users in the last quarter, which has helped increase revenue. This revenue was up about 12% above expectations and 74% up from a year ago. Earnings per share were also about 185% above expectations. The company is also planning to boost investments and hire more workers as a result of this. So for Q3, they're going to increase their expected revenues to about $1.22 to $1.3 billion, which is also above analyst expectations of $1.17 billion. This has resulted in at least 6 Wall Street analysts raising their price targets from around $65 to $85. They continue to make solid progress in driving usage and monetizing through digital ads. The stock's been up about 28% this year, and on technicals, they seem to be making a double bottom with a $73 buy point. Next is UiPath. Now, UiPath sells software robots that is estimated to cost anywhere between 2 to 15 times less than a full-time employee and can do as much as 5 times the work. Research from Gartner recently estimated that their revenues are more than the next 9 competitors combined. The company has a really clever land and expand model where customers start small, giving them a simple job to test out. And as the company proves its value, their customers begin to buy more and more robots across the entire company. So UiPath have picked up more than 500 new customers between Q4 21 and Q1 22. And their existing customers spent 45% more over the past year. Stock has been up around 8% over the last week, but down a similar amount since the first days of their IPO. It is still expensive, but analysts reckon a 15 to 30% upside over the next year. Finally, it's Coinbase, another very high conviction play. In the past, I've talked about the regulatory pressures they face in China, the EU and the US, where governments are stepping up scrutiny of their crypto-related businesses. There's also pressure from companies like PayPal and Square that use crypto trading products as more of an engagement tool versus Coinbase, which relies on it as a main source of revenue and profitability. So they rely on the price and trading volume of the crypto assets. In fact, 90% of the revenues comes from charging transaction fees and storing cryptos. So both of these metrics falling is bad news for Coinbase in the short term. Nevertheless, analysts are generally bullish about the stock and expect anything between a 50 and a 160% upside over the next year. A lot of this will depend on the price of Bitcoin and where that heads in the coming months. So there we have it. The top 10 are very similar to what we had last week. Tesla, Teladoc and Square firmly in the top 3, whereas Exact Sciences and Unity swap places. Cathie has pumped in around $87 million into Unity this month versus $42 million into Exact Sciences, and UiPath is not far behind. So there we have it. That's all for this week. I hope you found this update helpful. If you did, please do consider subscribing and smashing that like button. Thanks again for watching and see you again next week.